Finally, some relief for the markets as CPI shows that inflation is on the decline. Is this the beginning of a bullish run? Will the deflationary trend continue, or is this just a flash in the pan? Chamath Palihapitiya, billionaire and venture capitalist, helps us make sense of it all. And for you to make sense of the confusing economy, you need to be subscribed to this channel now. So click the subscribe button and turn on the notification bell. Let's get into today's interview.
Kind of generally speaking, is markets up, right? From nibbling to being constructively positive and basically being positioned long. Here's this really interesting setup. We have a bunch of very positive news that I think we all have to process. First positive news was that inflation ticked down. Now, here's what I'll tell you. There's a caveat here. I talked to a bunch of pretty smart sharps on Wall Street. And, two things. Number one is they all gave credit to David Sachs, and they said Sachs was totally right. Double dip recession is coming. But then they said, tell Sachs that we think that these are the sharps. We think that there's a double hump in inflation coming, which means it's coming down to come back up. And there's a bunch of reporting vagaries that may cause that. So keep that in the back of your mind. But positive news, number one, is inflation ticking down. Number two, federal judge basically stayed Biden's attempt at giving student loan relief. Now, that would have been a $500 billion transfer payment from the government into the hands of individuals. It is deflationary to not give that money to people. It's effectively taking stimulus away from folks. Number three, it looks like we're headed towards a split government, which means that we are not probably going to see any more stimulus over the next 2 years. Number four, Ukraine wins in Kherson. Number five, the United States announced yesterday through the Wall Street Journal that they had essentially said no to Ukraine's request for advanced drones. And they said to Ukraine, essentially, you need to go and negotiate an end game here. And number six, China has started to relax its COVID policies, and Xi is pivoting to economy first.
Inflation went up by only 0.4% from September to October, which is good news as the increase is much less than expected. Year on year, it's even better news as the latest rate is 7.7%, which is much lower than the previous 8.3%. The big question now is, will the Fed pivot? The result seems to be good enough to nudge the Fed to ease on increasing rates drastically, but it's also much higher than the 2%, which is Jerome Powell's target. Late on Wednesday, the yield on the 10-year Treasury, which aids in determining interest rates for mortgages and other loans, dropped significantly from 4.10% to 3.9%. Many economists had lamented the Biden student loan forgiveness as an inflationary move, but this has since been halted by the courts, and the economy may not be getting flushed with about $500 billion that would have gone into the program. Chamath felt this would have worsened the inflation situation.
The potential for a lot of great positive developments over the next 6 or 9 months. And I don't think that was adequately priced in the market. But here's the problem, and this is why we've been rallying. The problem is that most of this rallying has been because of a bunch of short covering by folks who were pretty pessimistic and negative after the last few inflation prints. So this is not really net new buying that we saw over the last couple of days. So you take it all together, I'm like, it's still going to probably trend up a little bit. But then again, we talked about this, Jason, when the VIX gets into the low 20s or the high teens, that's probably the short-term top, and then it turns around, and unfortunately, we're near the low 20s, high teens. So that's kind of my thought on things right now.
Shelter is the major indicator factored in calculating CPI. It accounts for a third of the values put into calculation. Unfortunately, shelter is not going down along with overall inflation decline. It actually rose by 0.8% over the month. This is the steepest rise since 1990. It also broke another record. Year-on-year shelter is up by 6.9%, the highest since 1982. With all this, it's not looking like the good news is worth celebrating yet. The Fed is likely to remain aggressive with rate hikes. This, however, had some positive impact on the market. Wall Street on Thursday enjoyed some respite as the S&P 500 gained 208 points, which is 5.6%. Nasdaq jumped 7.4%, while the Dow increased by 1,201 points, or 3.7%. to 33,715. The crypto market also enjoyed some recovery, despite the FTX scandal that had crashed the market earlier in the week.
We have all of this positive news in the offing, but the problem is, again, there is still a lot of risk to the downside. We haven't seen David's second, dip in the recession, right? So that double dip is going to be expensive. And again, the sharps think that inflation will come back at some point in the next 6 months. That will keep the Fed's foot on the gas. Maybe it's 2 or 3 more 50 basis point hikes. The point is, Jason, you could be at 5.5. Again, we said this last week. We're going to get to a point that's probably higher than what people expect. That's probably around 5.5. And we'll stay there longer than people want. That's probably through the middle part of 24. And if you don't prepare for that worst case scenario, you're doing yourself a disservice. I think the market can start to rebound in the second half of 24. But if you're a company, you need to balance and plan for the first quarter of 25. Because, again, most venture investors are going to want to see 6 months of data on the ground that things are better before their sentiment changes.
Yeah.
And we're just starting to see the drawdowns. We're just starting to see the impacts in people's portfolios. That will drive behavior change. I mean, this SBF thing is the tip of the iceberg in terms of the money at risk, which is like, if you look at, and these are just a couple of examples, but this is Meta, Amazon, Snowflake, Datadog versus Gilead, Raytheon, and Exxon. What is the point of this? The point of this is just to show you that we have had a massive rotation away from our industry, is the point, right? Where normally the things that we would work on were just so well received by so many different kinds of investors that unfortunately just isn't the case anymore. And I think it just goes to show you that the reason why this is happening is because people are hedging their bets about how long the economic pain lasts. That's why, they'd rather be long healthcare stocks, industrial defense companies, and oil companies.
Chamath Palihapitiya does not think the latest drop in inflation rate is worth celebrating yet, and he's not alone. Zach Stein, Chief Investment Officer at investment advisory firm Carbon Collective, said, even with the likelihood that inflation has peaked, inflation will still remain elevated for some time, as supply chain issues persist and there's still plenty of instability with the Ukraine war, which has caused significant swings in energy prices. Preston Caldwell, head of U.S. economics at Morningstar, also predicts that inflation is likely to remain above 2% into 2023 or even 2024, just as Chamath forecasts too. Some experts believe that inflation is coming back and the Fed will keep interest rates high for a more extended period than people are prepared for. There's also a massive switch in the markets because tech companies have lost their place as the most sought-after stocks, and other industries such as pharmaceuticals, heavy manufacturing industries, and oil companies have become more popular in the stock market. How are you investing, and what are your predictions for inflation? Let us have your thoughts in the comments below. Remember to give this video a thumbs up and subscribe to follow all the latest developments.